Hot picks today, we are focusing on industrials. And of course, this is a segment that could be hurt by tariffs on aluminum and steel, for example. Our guest says he prefers names that are proven operators with less exposure to manufacturing input costs and cross-border trade. We're joined by Ernest Wong, analyst and head of research at Baskin Wealth Management. Great to see you once again.
Happy to be here.
You've been following, I know we've been talking about TFI a lot, but it's a fascinating story. It's been a wonderful winner for investors over the years, out of favor right now. What is your take? You do see promise in TFI.
Yes. So we've followed TFI International, our firm Baskin Wealth, for about 20 years now. So we're very familiar with the company and especially the management team and how they operate the business. So the main issue for TFI International today is macroeconomic pressures related to the trucking industry. It's not TFI specific. All of the players are facing an oversupply of capacity and slowing demand still following from the 2022 period from COVID overhang. Mm-hmm. So TFI is facing certainly an unfavorable macro environment overall. I think the second issue is that TFI has really struggled to improve T-Force Freight, which is the business that it bought from UPS in 2021.
Okay.
At the time when TFI bought this business, it was an unprofitable division of UPS. Mm-hmm. And TFI's investment thesis, so to speak, was that it could go in, it could cut costs, and it could improve margins quite rapidly. Mm-hmm. This has turned out to be much harder than TFI expected. Mm-hmm. The fleet was in worse shape than they thought. The service quality was bad. The reputation of the company with customers was poor. Mm-hmm. And you add to the fact that we're currently in a freight recession, and the margin profile overall of T-Force Freight has been much worse than TFI's management originally expected where it would be today.
It sounds like some of the customers they picked up from UPS were just not profitable.
Exactly.
They were troublesome or...
Yes, exactly. So the bright side is that we think if you look under the hood of the figures, they have made a lot of progress in improving the service quality at T-Force Freight. They said in the most recent earnings call that missed pickups were down 50%. They've refreshed the fleet of trucks so that they're saving a lot more on maintenance and insurance today. And I think an important thing to keep in mind is that T-Force Freight was earning a much higher margin in better times already. So there is precedent for the management there is precedent that the management has for that the division can earn a higher margin in better freight times.
Right, and the stock, I mean, it has generated, I'm not sure if we could throw up a 10-year chart for TFII in Toronto, and it has, in the past, proved that it can pull off rapid acquisitions.
And exactly, I think that's a key part to the theme as well, is that TFI has a great track record of maintaining a clean balance sheet and generating strong free cash flows so that in weak times, they are able to make acquisitions. Mm-hmm. And I think very likely they will be able to make an acquisition to add to the scale of T-Force Freight to improve margins in the future.
I'm sorry, we're tight for time. Copart, a big player in salvage auctions and autos in the States. You think they could be a winner from tariffs?
Yeah, so Copart is the largest auctioneer of salvage vehicles, where they buy them from insurance companies and sell them to emerging markets. And what generally happens with tariffs is that tariffs raise the price of used cars, so that pricing generally goes up. It becomes more expensive for people to repair their cars, so they're more likely to auction them off, and Copart ends up benefiting from that.
Okay, that's interesting. So the cost of repair going up, well, we all know about that.
Yes.
Yeah, you crack a window now and it seems you have to fix multiple sensors. Yeah. Yes. And then finally, Waste Connections. We talked to the CEO of GFL a little while ago. What attracts you about Waste Connections?
So Waste Connections is one of the larger waste operators in the United States and Canada. They have a great track record of improving margins from acquisitions and choosing markets where they earn superior margins to competitors. And the way they do that is by focusing on smaller secondary markets or markets where They own the landfill and can provide an integrated service. And we think that this is a very well managed business with a lot of opportunity for acquisitions going forward.
And this is working in the garbage industry is one of the most dangerous jobs in America. And you reckon they've done a good job on safety?
Yeah, so one of the things that we love about Waste Connections is that they have a great focus on maintaining a servant leadership culture. And
A what?
Servant leadership.
Servant leadership.
And what this means is that they really place their employees at the focus of the business in a very, very dangerous working environment. And this has tangible benefits to their business in terms of lower employee costs, lower insurance, and happier employees overall.
I know. I see those garbage truck workers in Toronto hanging off the truck and riding along, and I think that looks like fun, but I could see it going wrong. And I respect those people, especially after a big snowfall like this. Thank you very much, Ernest.
Thank you.
Ernest Wong has been our guest there. He's